Futures point to a higher open on Wall Street following yesterday's largest decline of 2012. Economic data include ADP employment report, non-farm productivity, and consumer credit. In corporate news, Apple is hosting its iPad event. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the morning call. Scott, we have a huge day on tap. Before we set up our trading plan, let's review some key levels yesterday following the largest drop in 2012.
Yeah, well, yesterday we had a bit of a short-term momentum change. Macro-wise, I think that the uptrend's intact, but short-term momentum traders, a lot of guys got out of some loose positions starting late last week when we started to see some weakness in the Russell. We saw some weakness in the semis. And then on Monday, when we broke the 10-day moving average, that was your sign to actually get a little net short. So if you look here at the chart, you will see here is the S&P. Here is that accelerated uptrend that we've been following ever since the December 20th gap and go. This was Monday. It doesn't look like much, but this told technicians a lot as we closed below this 10-day moving average that we've been trailing during this entire run. And then here we are. We broke that uptrend. Now the question is, what do we do from here?
And we have a very busy day on tap. We have that big jobs number on Friday, so you're going to see traders posturing into that, but we have the ADP employment report today and the iPad event in California, so the headlines are going to be fast and furious.
Yeah, so what I want to do is I want to show you on a technical level the damage to yesterday, because there really wasn't. So I'm going to use my trusty Fibonacci retracement levels to look at here. So if you take a look at the chart once again, here's the close-up. So this is the plan that I put in place for myself and some of my traders. If you go here to the Fibonacci retracement, you can see this is where I drew it from. This is when the market ignited back on December 20th, all the way up into the high. So there's the high. So if you look here to the right, all we did is retrace 25% of what the move was from December. So a 25% retracement, and if we hold here, that shows you a very, very, very strong market. So the question is, can that be the level? Was that it? So what I want to do is I also want to see the retracement here. This is the level that I think that if the bears want to have continued downside action, they don't let it get back above 1357 to 1359. So if this area holds this rally over the next few days and we break below this area, then the next area to watch will be the 50-day moving average, as well as a 38.2% retracement, which is at 1319. So here's your 25%, here's your 50, and then here's actually the halfway mark, which is around 1302. So write those down; those are important.
Right. Well, I mean, it's really tough for the bear case because no one wants to get short this market because you have so many people on the sidelines ready to buy because they want to try and get in, levels that are a little bit more attractive. So it's kind of a wait-and-see game or a buying game. Moving along to the sector spotlight, in our overall theme for the morning call, leading names are now lagging, sector-wise and stock-wise. We're going to look at the large-cap tech names for the sector spotlight, kicking it off with Microsoft.
Well, Microsoft has been a great performer this year. It was surprising, but to technicians it really wasn't because it broke a downtrend. It's been a 10-year base, so this is something to watch as we move forward to measure what could be a bounce or a future decline. So if you look here at Microsoft at the chart, you will see this has had an unbelievable move. If you look on a macro version, you could see real quickly right here, this is when it broke this downtrend going into December when we called it frisky. And look at the size of the move. So the real question that traders have to ask themselves, are they going to buy a dip too early? So from about 32 down to 31 and change, is this the dip that's going to happen and we're going to continue higher, or will this accelerated trend here change? So, I would say, test this level here, but if it doesn't hold this 31.26, this will give us clues that perhaps it comes down to the 50-day, which is 29.52, and if that's the case, we're going to see more downside action. But if Microsoft holds here and people are waiting for a bigger dip and it continues, then those are going to be some big decisions people have to make on whether or not they want to start paying up. So watch this area right here as a key barometer.
Moving along to Intel, this name was actually slightly up in a down tape yesterday, and it got a broker upgrade this morning.
Well, it just shows you how you could time things because it's been in a base. It's been a little bit weaker with the semis. You saw the semis break down late last week. But yesterday, for a Q trade at the 50-day, it was worth a shot. The question is, was that the bottom? So again, use that as a point of reference. If you look here at Intel, like you said, it was upgraded. Look at this chart. Okay, it's had a really nice move. We talk about timing things. This is when it broke above the recent resistance. So here's your retest. So it makes sense to buy a little bit here, but this is also going to give us clues whether or not yesterday was the correction. So right here at the 50-day 26.18, you want to be long it, use that as a stop. And if Intel, starts to go above this channel, you're going to see some strength in the semis, and then that might have been it.
Well, as Stephanie pointed out in the Twitter feed this morning, a lot of the semiconductor names are providing mid-quarter updates. So you will see some headline news coming out of that. So in addition to the charts, we want to pay attention to the fundamentals as well with that. Let's move along to Cisco, ticker CSCO.
Yeah, Cisco, again, you can't pay up for Cisco. Cisco was like a value play last year. It gave us a little bit of momentum early this year. At this point, if you look at the chart of Cisco, I think it's kind of like just a market perform. No beta here. So if you look at Cisco at the chart, you will see that this was the level we talked about. Earlier in the year, you had a little bit of a trade above 19. Here was your retest. And ever since then, it's been just dripping lower. And if you look here, dripping lower, nice visual. Anyway, here you go. This is your uptrend. So right now, Cisco came back and retested it. So some traders, investors would be buying right here. So if this was the low on Cisco and we bounce, market should continue in stride. But again, this is a key level here. If it breaks below this 19 and change, you're going to see some more downside action in the overall market, and then you have to look lower. But for now, trade versus area, and then there's going to be some resistance because it's under the moving averages, which always points at some resistance, and that's right around 1988.
One of the two names that provided the biggest gains and losses for the index is IBM. Caterpillar, the other one, but we're looking at large cap tech. Let's review the chart for IBM.
IBM has been an unbelievable investment for the last decade. You haven't been trapped like you were in Microsoft. So now it's not moving as quick, but there's been some trades there. I looked at this earlier in the week, or actually it saved my day, I think Monday, when it broke above 200, and I sold it. I'm flat. In the Twitter sphere, I talked about it, but it doesn't mean you have to be. You have to know your time frame. So if you look at the chart of IBM, this is what I was trading for. This was your first move when I was getting involved. This was a nice breakout above this area, and so far it's holding. For me, this was a little bit of a surprise yesterday, but if it were to break below this 195-ish, you could see some more downside action. So that's your stop there. If it goes sideways and the market wants to resume, this is something that's been very, very strong. Just don't be in anything more than a tier 1 there with IBM now.
And let's round it off with Oracle. They're continuing to invest in the business and creating more growth through acquisitions.
Oracle has been another one where you're either in the penalty box or you're a market timer. And if you remember 2 quarters ago, they had a bad quarter, or they pre-announced, not exactly sure exactly what happened, and went down to that double bottom area. If you look here on Oracle, this is when we spoke about it on the chart. Here you go. This was your macro double bottom, right? After earnings. Even as a trader, if you didn't catch that, you could have been a buyer right there as it cleared this pivot. So coming into this resistance, if you were long a lot of it, I would sell some. And if you wanted to buy a dip, I do think at some particular point, it's going to come back and retest this 28.16. For at this point, I would sell some strength as it's coming into, a big spot right there.
Okay, we're going to go into a quick commercial. When we come back, we jump into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with the cyclical names. Again, these were names that were leading. Now we're lagging. You have those concerns with China and Southern Europe. So, there is that normal expectation they're going to come in a bit. We're going to kick it off with Honeywell, ticker HON, which is trading at a discount to the peers in its group.
Well, Honeywell yesterday broke below its upper range. So for me, I think it's an avoid. If you took some profits, great. If you didn't, be a little bit careful. Look at the chart here of Honeywell. It's had a major move from this low. It broke this trend line and was going on the right side of it, which you don't want to see. Started to go below the moving averages right here, and here's your gap down. Okay, just started what could be a correction. So I would say if you're looking to buy back Honeywell, I would sit on the sideline and I would wait. I think you get 56 at 56. I think it's a bit more compelling there.
Moving along to Triple M, this is one that's sitting at its 200 DMA, holding an investor meeting, and this one happens to be the most expensive within the group that we're looking at.
You know what, I tried being long this like 2 weeks ago. I thought it would break out. It was in that choppy little range, and I'm used to trading fast tech names, high beta names, and this one was like lulling me to sleep. So I was like, you know what, I'm just going to get out of it. And with a little luck, I got out of it, but it also, broke this little trend line here. So if you're still in it, you have to be careful. Come take a look at this chart. You'll see Triple M was going sideways. I was trying to play it for a move above this area because you know how Red Dog loves tight patterns, and this was getting really, really tight. So I figured it can continue. But then once it started to weakening here and get below the moving average, I just said, you know what, I'm out of it. You had a big down day yesterday. I would think this area right here is a level to watch. This would be your buyback if you're looking to get long Honeywell, or if you look here at this trend line, it comes in right around here. I just don't think you need to be in a rush, and it's not very exciting to trade, which I learned last week.
Rounding off the industrials, we're going to take a look at GE. Latin America is really driving the growth in this name. It's got that healthy 3.7% dividend yield.
I trade GE like 3 times a year when there's a spot and you can get cash flow, and this isn't one of those spots. If you look at GE, if you take a look at the chart, it also broke this upper area. Okay, for GE, it was a kind of a sexy long right around here. And then when it traded above this resistance, since then it's been a choppy mess. If you're an investor, okay, being tier 1, if you're looking to buy a dip, I would say on GE, you have a point of reference. We have a point of reference with everything. Yesterday's low, so we start getting below yesterday's low on things. I think the more compelling spot to buy back GE would be about 17.5. And then obviously if it bounces, see how it handles this 1880, which was that broken support, which usually turns into resistance.
Moving along to the financials that are lagging a bit, we're going to look at Bank of America and Morgan Stanley. And Scott, I'm also going to throw in Wells Fargo because that's been a relative outperformer. Bank of America, ticker BAC, that one's up 39% year to date.
Yeah, well, Bank of America showed you again, one man's trash is another treasure, and this year was a great trade coming into it. Lately, it's been showing a little relative weakness. Now, during market corrections, what you want to do is you don't want to buy second, third, fourth tier names. You go after the leaders. You go after what just corrected. You get the best of the best. That's what's great about pullbacks, because you can embrace it and you can buy it. So if we go to Wells Fargo first, you will see that this has been one of the relative strength leaders, as well as JP Morgan. So if you wanted to buy anything, you buy Wells Fargo coming into this moving average, coming into support. This would be a tier 1 if you got out when it broke this upper range. So if you want to buy back and you're aggressive, buy here. If you're looking to, or you think we're going to pull back further, this 29 is a bigger area. If you look at, like we just said with Morgan Stanley, shows you the relative weakness. When Wells Fargo was at the highs, this was below the low. Okay, this was already below this high, so that showed relative weakness. So for this Morgan, I think it's an avoid. I know it could bounce a little bit, but I don't like this chart. I don't like what it's doing. And also, as far as Bank of America, here, it also didn't make a high here while JP Morgan and Wells Fargo was. It was below this high. That shows me some weakness. I think you could wait till about 723 to buy this one back after this major move.
Let's go to quick hits for some quick cash, and it wouldn't be a morning call unless we spoke about Apple. Barclays taking up that price target to 710, the highest on the street. This is a trading game right now. It's 500, a little bit too rich for the investor, but traders are loving playing the ranges.
Yeah, well, you have to know your time frame here. If you're an investor in Apple, continue to close your eyes. I think the valuation is still cheap, and I don't think we've seen the highs of the year. As a trader, you got to be very quick, very nimble. I came in yesterday, flat Apple. I saw the relative strength. I bought some. If you look here at the chart, you will see, here's where you had the outside day a few weeks back. It held the 10-day. This is when it broke that upper range. Some guys got short. If you did so, congratulations. I did not. Yesterday, I bought some, especially after it went back above the previous day's low, and up $3, $4. I'm probably going to sell some on the open and trail some, because sometimes after an event day or a product announcement, they like to sell Apple. So if you long some and you're trading it, just make sure you watch the composure after the event's done to see what they want to do with it.
Moving along to Broadcom, we're checking out some key support levels in this name.
Broadcom, I know, has a story, and people like it long-term fundamentally. And I know Stephanie was waiting to buy a dip, and yesterday it hit one of those moving averages. If you like the name and you want to buy a dip and you have a longer time frame, this is the area. Once it broke this 36, you can see here was your little topping tail, came in, lower high, broke this. This is what your get out of Dodge type of scenario. And then right now at the 50-day, it is showing some relative weakness, but if you have a long-term plan, I think buying it versus this 34 area makes sense, but just watch this area, because this should not, this should not break if it's going to be going higher in the near-term future.
Moving along to those casino names, which you've done some fantastic work with, we're going to take a look at Las Vegas Sands and Wynn.
Las Vegas Sands, and the casinos were nuts last week, and Jim went over it, and we had great longs. It just shows you again how if you're a market timer or you're a trader, you have to know how to deal with these stocks. And if you look at LVS, case in point, perfect scenario. Okay, here you go. This is when we spoke about it, when it broke above this bull flag. This is when I got long. This is when you saw it on my virtual trade floor. On my disclosures, I was long LVS. Then you had this nice 4-day move. On Friday, I tweeted, I am done with LVS. Look at the size of the move that we've seen. This was also a buyable pattern way back here. So here's your outside day. Here's your mini reversal for short term. Doesn't mean for the year. Doesn't mean it's done going up for 2012. But short term as a trader, that's your sell signal. So I got out, not even thinking we were going to get such a big move lower. So yesterday versus support, I got along a little bit. I do think it could fill this gap. I think you could, you play it for a cute little trade back up to 54. And if you want to continue to trail it versus today's low.
Moving along to McDonald's, this almost reminds me of the call that we had with Mark Sebastian on Thursday with Starbucks, where these names just continue to hit 52-week highs. So does 52-week highs beget 52-week highs, or are we looking at some consolidation here?
McDonald's has been consolidating. It's been also great. It shows you could be an investor. You did your homework. You invested in McDonald's. You like their burgers and fries. You could have got rich. So here the chart actually looks good again. This will be a good market barometer to see if these stocks continue higher or they correct. So if you look here, you see a nice tight consolidation pattern. You have a high, lower high, a low, higher low, higher low. It's starting to get really, really tight. So if McDonald's starts to break to the upside, that will tell us that the market might not have much more downside. But if McDonald's starts to break to the downside, we could see some more corrective type work. So watch McDonald's close as well as your Starbucks, because Starbucks does look good. I'm going to throw it in there just for, S's and G's, and see what goes on here. Okay, if it holds this level and goes sideways, we're not going to see much of a correction. But if it starts to break down below that level and you see some leaders start to get faulty, you know that we might hit some of those deeper retracement levels than we just hit yesterday.
And rounding out with my favorite name in the banking space, JP Morgan.
JP Morgan, yesterday, I got out of it, and I'm like, I want to buy somewhere around 39.20, and yesterday I didn't pull the trigger because it just seemed like it wanted to go a little bit lower. I think this is the class of the group. If you need to be long a bank and you don't want to sell anything, this is one of them. And if you look here at JP Morgan, you had its first down day, so that's why I wasn't as aggressive. I'm trying to be cute, and sometimes when you're cute, you get made ugly because if you wait too long, you don't get it. But here is that top. Obviously, look at JP Morgan. 3 days ago, it was at a top. Morgan Stanley wasn't. Bank of America wasn't. That's why you see relative strength here. This is why it's the first one you should turn to. So right here, I would say around 38.74 is where I'm going to look to it. Obviously, if it just starts heading higher from here, I might have to chase. But I think 38.74, even down to here, would be that compelling area to buy back that dip.
All right, so we have a real busy day. We're going to have this headline-driven market. The ranges will probably be pretty tight. So, Scott, before we wrap up, give us some advice in terms of position management and size.
Well, at this point, like yesterday, I covered my shorts because we were 30 handles off the high. I said that was a nice down day. I didn't get caught in it long, so I'm not going to be greedy. I want to cover. Went along a little bit yesterday, Apple, LVS into the close. And at this point, what you want to do is you want to judge the bounce. There's an easy part of the bounce where we get an oversold bounce to just say 1350 to 1354 in the S&P. So if you just want a Q trade, maybe you take some longs off there. And then there's just a rubber match spot where if the bears have control, they will not let the market get back above that 1357 to 1359. And in that area, if you covered your shorts yesterday, look to lay on some a little bit there. And also, if yesterday, just say you were like shaking, like, oh my goodness, I can't hold myself through this correction, salvage some longs. Never feel uncomfortable. Sell into that bounce instead of into the emotion like we saw yesterday. So this way you have a strategic plan moving forward. Okay, well, we'll take a look at the charts with you as Scott and the team wraps it up for us every day on Options, Profits, Real Money, and T3Live.com. Have a great day, everyone.